Welcome, welcome, welcome. I'm going to ask that everybody stay off camera. I'm going to be sharing my screen. It came up. So I'm going to share a few screens today. The first screen I will share will be the list of deductions that we normally write off. And so I'm going to wait for a few minutes. So while I'm waiting, if you have any particular question, go ahead and text me 630-618-6008. And I'll be happy to take care of it before the crowd comes in. So what I want to say, sometimes, even though the tax system tells you you're entitled to a deduction, doesn't necessarily mean you want to take every single deduction. And I will repeat this at the end of the class, because I've seen people with deductions that really hurt their business, like something like the home office. Just because you're entitled to deduct it doesn't mean you should deduct it. There is a severe hurt that you'll be holding if you ever deduct your home for business. And I will be sharing that as well. Also about the mileage for the vehicle, if it's really going to make your financials look really bad to the banks. If you're gonna if you have the vehicle anyway, sometimes we want to skip it because you don't want to make your financials look really bad. I'm not saying don't deduct what you're entitled to, but sometimes you have to weigh, do I really want to look more negative? And then no bank will fund you. And therefore your business will become stagnant. It will never grow. And so you always want to make sure that you decide if that's what you really want to do. And so, let's see. Okay, hold on. And so you really want to make sure that you weigh that between your ability to grow. And so it's 7 o'clock. Let me get started. All right. So this is a screenshot I took from a tax return. This is all the some of the expenses. Welcome, welcome, welcome. Let's all stay off camera to help the privacy aspect of things. And so I just brought these deductions up. This is a sample of the expenses that came from a tax return. And so as you look at these are suggestions that they give us. But in many cases, most of the time when I get in a tax return, I zap these out and I put my own because I'm paranoid and I enter every expense by hand. I never import the data in, because sometimes when you import the data from the accounting software, it may put things in the wrong way. So with my OCD, I had to type it all over. I never use this list here, but I brought this up just to show you that this is some of the, let me know if you're seeing my screen. This is some of the expenses and I hope it's visible. So the first one is automobile and truck expenses. So this year, okay, great. So this year for the mileage is 65 cents, 65.5 cents. Now, the trick for the mileage is that if you have an old vehicle that you fully paid for and you want to use it to do your business rounds, then the mileage is perfect for you. And so you need to get a software. There's an app called Mileage IQ. Some of you are using QuickBooks Mileage. It's perfect. Just make sure you are religiously recording when you are making business rounds, like going to the bank. Those of you in real estate, going to the properties, you are always making sure that you are tracking it religiously with a timestamp. And so at the end of the year, you just send me the Excel file. We have that as the backup of my work papers, and you also have it in your records. Trust and believe, when the IRS come and they see that religious record keeping, they won't even look at it. And this is between you and me. They won't even look at it. I've been through this where I've taken over accounts when they had trouble from the prior CPA. So whenever they audit you once, you get target. And so maybe every 3 years, they want to look at you. But when I took over this person, because I was religious in everything I was doing, the last time they audited him, they spent like 3 weeks. When they came in 30 minutes, they were out of the office. They like, everything is here. There's nothing to see here. And they've never been back since. This is 2009. They've never been back since. So it pays to have the records, right? And you can back everything up. And so long story short, make sure you have your record of your mileage if you're going to do the mileage. Now, if you have a new vehicle and the vehicle is in the business name, then you can choose to do your deductions like the payments and the gasoline and everything. But make sure that you have another vehicle that you are using for personal, for you to claim that this vehicle is 100%. If you only have one vehicle, I wouldn't do that. You can do that and then take maybe 20 or 30% as personal use. You cannot say 100% because then you become suspicious. So automobile is one of the areas, and I'm taking time because that's one of the areas they audit heavily. And so you want to be very, very careful about it. Now, sometimes it's not worth, if your business is really losing money and it's your personal vehicle that you've used, you can forget the mileage. The reason I'm saying that is that you don't want to look, your financial to look too much negative, right? Because if you look too much negative, the banks may not loan you any money. You want to show profitability. So if it's something like a vehicle that you would have bought gas in it anyway, you would have used it anyway, then I say, let's take the hit on not deducting it so that we can show profitability. Yes, you will owe taxes, but the taxes that you owe pales in comparison to the ability to get loans, to grow your wealth, and to grow your legacy. So sometimes you have to balance between the two. It's not everything that you want to write off. This is not on the list, but home office is one of the big ones that people beat on the drum about. Write your home off. You can write part of your mortgage. You can do this without getting into too much of the nitty-gritty. The bottom line is this. If you write off a portion of your home, like a portion of your mortgage interest, your insurance, everything, fine. The percentage or the square footage that you are writing off as an expense, trust and believe, when you sell your house, they are keeping their memory. IRS is keeping track with you claiming the home office. So say you sold your house and you made $450,000 as a couple for capital gains. Normally, couples can get away with $500,000 profit in their capital gains. However, the portion that you claimed as home office, there's no limit on it. They will expect you that if you claim all those years, 10% of your home as a home office, 10% of the capital gains. So that 45,000 of it will be taxable. Is it worth the 2,000 or 3,000 that you were getting? So how do I do this for my clients that work from home? What I do is I say, okay, we will take a portion of the utility bills. It's not much, but the utility bills, we call it something called occupancy cost. So while you're working from home, you're using the bathroom, you're using the light, you're using the internet, you're using all kinds of things. So you can take a portion of those utilities and then have a line in there, say occupancy cost. That is what we write off on the return. That has nothing to do with your mortgage interest, your property insurance, all that stuff. When you sell it, they don't see anything about home office, and this way all your capital gains is tax-free. So be careful with the people on the internet talking about home office. It's hard to explain. I hope I've made it clear, but those of you, we have private sessions. I can go over it again if you want me to, but let me know if it is landing, if it's making sense. I'm going to check my messages on Facebook. And I'm also going to check it on my text. My phone number is 630-618-6008, 630-618-6008. You can text me if you still have questions, but this is why I take the time with both automobile and home office. They are two big ones. The next one on the list is bank charges. That one is pretty straightforward. The startup expenses. So some of you, when you start your business venture, you are taking classes, you are getting mentoring, you're getting coaching. Yes, you can write off some of these, but some of you do pay a lot. Like I've seen some 40, 50,000. I've even seen some 90,000 with all the programs that they had to go through. Now, the government allows you up to 5,000 for startup cost to write off. So what do you do with the difference the first year? What we do is that we do the 5,000, but then we capitalize the difference, right? So say you pay 45,000 in classes and coaching and everything the first year. We cannot write all that off and show 90,000 losses. So we have to capitalize the rest into an asset called intangible asset. Like you cannot touch it. It's not physical asset. It's not fixed asset. It's not current assets. It's not cash. It's intangible. And so we're going to put it in other asset. And then we are going to amortize it, meaning we're going to divide it up over a certain number of years. We can do 5 years, we can do 10, we can do 15, depending on the type and the amount. That's subjective. That depends on how your CPA sees your numbers. And if it's a huge number, I probably would do 15 so that it's amortized evenly so that your numbers don't look too negative to the banks. All right. So that is what I do with the startup cost. Consulting fees, you can write it off. Credit and collection costs. For example, if somebody is not paying you and you have to pay a collection agency to collect the funds, which I tell everybody, don't do that. You always collect your money on the first of the month. If you're a consultant, IT consultant, web developers, accountants, bookkeepers like myself, you do everything on the first. And so you get your money up front. This way you don't ruin a relationship with a client by chasing them for money and then you get upset and everything blows up. So never allow yourself to have to send anybody to collection. Just get your money up front. You use QuickBooks to do the invoice, and I have the QuickBooks still running. If anybody has QuickBooks question, I'll go to the QuickBooks session also. So delivery and shipping, postage, all that you can write off. Discounts that you give to people, you are allowed to deduct that as well. So this is how it works. Say I charge somebody, I normally charge $3,500 for my tax return, right? And if I give a discount of $500, I can show the $3,500 on the top line. So the banks will see that I have $3,500, right? But the discount, the $500, I had to put it in the expense section so as an expense, because I didn't get the full money. So I get to write off the other $500. So that's what the discount is. Or if you sell products, the discounts that you give to your customers. That's where you need to put it. And another reason why you want to separate the discount from the gross sales, the 1099Ks, the processors are processing it at the gross amount. You sell something on Shopify, for example, and you sold, say, 20,000, but you discounted it by 5,000. The 1099K that they're going to show to the IRS that you made a sale of 20,000. They will not say 15. And so when the IRS sees your tax return, they are expecting to see your revenue line to say 20,000. If you have 15, they're going to say, you underreported, and they'll come after you. So that's one of the reasons why you want to show the gross amount always, so that it matches the 1099K, which there's going to be a lot of 1099Ks this year because the government now is going after Venmo, Zelle, Cash App, any eBay, everywhere. All the people who are doing delivery business, the gig economy, they're going after them. And so it's up to them. If you know any of your little people that are doing it, teach them how to get an accounting software so they can track at least their mileage or their little bit of expenses, their gasoline, everything, so that at least they can write off all those expenses against the income that they're going to be getting. If I have enough gig economy people, I probably will do a class. Now that I think about it, I probably might do a little gig economy class if I have the need to. But it's so important to track your expenses. And I hope most of you now have accounting software. If you don't, we got to get you going with either Wave Apps for your little businesses, or if it's a real estate, you have properties, I would suggest you stick with QuickBooks because that has the breakdown, how we can break the properties down, and it makes it easier. And you can also see the profitability of your projects, of your properties. And so that's what I would recommend. All right. And so dues and subscriptions, you can write it off. Equipment rental. So sometimes you want to say you have a property and you need a deep cleaning carpet. A tenant moves out and you need to do deep cleaning, and you go to the store and you look at the price and say, oh, it's $300. Let me buy it. But then can you find out if you can rent it for, say, $30 for a couple of hours? And so you are not using it just once, and then it's sitting there for another year before somebody moves. Meanwhile, you've tied up your capital. So always evaluate. Is it better to just rent the equipment for a little bit, use it, return it, and then when you need it again, you do that instead of tying up your capital? So equipment rental is a good way to find out if you really need to buy. Insurance, we know that you need, everything has to be properly insured. All right? All your properties have their own insurance, but if you have lots of properties, I will recommend you get an umbrella policy. The umbrella policy, even if the properties are all in individual LLCs, or you have a few of them in a group LLC, my go-to is $500,000 of properties in one LLC. And then the next LLC, you maybe do another $500,000. It depends on your area. Sometimes just one property will be $500,000, depends on the area that it's in. That's my go-to principle. And then you have an umbrella policy that covers everything. You have your let me see, if you have an office, you need an insurance for that. No, don't skimp on the insurance. Also, this is something that people don't think about. There's something called key man insurance. If you are an entrepreneur, you're running your business, you don't think of key man insurance. It's so important. God forbid something should happen to you and you can't work, disability. Sometimes if you have those insurance and read the fine print and have an attorney or somebody read it over, it can pay your office rent, pay your employees while you recover. That's a very, very important insurance. It's called key man insurance. You want to look into that. Also, if you have employees, you want to make sure you have workers' compensation. In some states, if you don't have workers' compensation, you could be penalized from 10,000. I've seen some up to 50,000 for not having workers' compensation. It's expensive, yes, but that's not something you want to play with. God forbid somebody falls and something happens to them. Their family can sue you. You can lose your whole business. And so make sure that you take care of the workers' compensation aspect of it. That's just a few. Now, some of you are asking me about putting the business, the automobile in your business name. Now, the insurance in the business is a lot higher. However, if the vehicle is totally for business, then I say you have no choice but to have the business insurance as the automobile under the business insurance. Then you have no choice. All right. So that if your employees are driving to pick up materials here and there and something happens, they are covered. You don't want to skimp on that. Janitorial, like paying somebody to come do the cleaning around. Now, this gets tricky because some of you work from home and you feel like you can get a cleaner to come. Yes, you can. However, a portion of it only, the area that you use for your office, that is the portion that you can write off as janitorial, but you cannot deduct your whole house as janitorial fees. Keep that in mind. While you can get cleaners, yes. So say you paid $200 for it. The area that you are using is about 10–15%. That's the portion I will recommend you write off and don't pay the whole bill from the business. You have to pay personally and have the business reimburse you for the janitorial part. Okay, let me, I've talked for a little bit. Let me check my messages to see if anybody has questions. Let me know if everything is making sense and you're finding value for your time, because I do appreciate your time. Okay, it is making sense. Okay, thank you. Laundry and cleaning. Now, I've seen a lot of people telling me because they are a speaker and they are this and that, they can do their dry cleaning clothes and then write it through the business. Now, you're asking for trouble. Here's the thing. These are clothes that you're going to wear outside of your business. Now, if it's uniform, it has your business logo on it, and the only time you can wear it is only during your business, yes, then the laundry and the cleaning is qualified. But if it's ordinary clothing, I wouldn't push it. It will be denied if the IRS auditors come in. So keep that in mind. And that's another thing. I don't think it's on here, but apparel. Like say if I had a jacket and I have engraving that says J&K CPA LLC, which I'm about to do a lot of them. So very soon you will see me in my own clothing with my logos on it. This is a way to have your business pay for your clothes. So as long as it has your logo on it, it's a tax write-off as a business apparel. But if it doesn't have your logo like this, I could not write it through the business as business apparel. So keep that in mind, okay? Get hats with your name on it, jackets with your name on it, sweatpants with your name along the side. As long as it has your logo on it, it's a business apparel and you can write it off. So that's what you do. And I used to do this when my kids were little with Mary Kay. I'll buy the Mary Kay t-shirts, and my kids were my billboard. So as they walk around the school, and then one of the schools, they went to a private school. So when they went to the school, I got a note back and said, no, you cannot put them in branded clothing. I'm like, yeah, sure. So then I was busted. But I tell you, it works. Okay. So maintenance, regular maintenance of your property. Miscellaneous. Now, I don't put anything in miscellaneous. You all know I'll be driving you crazy asking you, what is this? What is this? I never put anything in miscellaneous unless I'm really desperate at the last minute and I still can't find it and I don't want to bother you. And it's like under $500, depending on your revenue level, I'll just stick it in there. But I hardly use miscellaneous because IRS loves to dig in there and cause trouble for you. And now they can actually log into your QuickBooks file. They will ask for that. And then go into your business and poke around. And I don't want to give them any reason to come poke around. So make sure we get everything right. Okay. So again, they did the organizational expenditure. So there's a difference between the startup expenditure and the organizational. The organizational is like your trademarks, your copyrights, your business registration, everything that you are using to organize the business, all the paperwork. Those are the expenses that go here. Again, if it gets to be more than 5,000, we will have to amortize the rest and then put it in the balance sheet and then amortize the rest over several years. So we don't throw your profit and loss into a negative position. All right. I still don't see any questions, so I'm assuming that I'm making sense. Okay. Office expenses. So sometimes I will split the office expenses and office supplies. Because sometimes when the two numbers are together, it could be too big. And with the IRS, if a certain number is too big, usually they use percentages and they use industry metrics. And so you want to break it down as much as possible so that it stays under the radar. I'm telling you all my secrets now. So I will split regular office expenses, say you're getting coffee and things like that for meals for the staff, things like that. I will just put all those as office expenses, but the regular supplies like the pens and the paper and all that stuff, printer, ink, those will go in a supply. So I will split the two, office expenses and office supplies. Okay. Okay. And so then we are going to parking fees and tolls. Now, if you are doing the mileage, then you can do the parking fees and tolls as additional to the mileage that you'll be paying. But if you're doing the individual bills, then the parking and tolls, the gasoline, the payments, and all that interest on the car loan, all those will be deducted. The postage, we know what all about. The printing, so you are printing a lot of material like you print some manuals and things like that for if you're doing training, you're printing manuals, all those will go under printing. Sales and promotion expenses. So many times, some of us, we do like pens, we do, like I have these pens here with my name on it. I can put all those under promotions. And also I have little notebooks, and I think once they come, everybody's going to get one. I'm going to mail one to all of you. A little notebooks with my business name and the website and everything and the pens. It's those promotional items, you can definitely write those off, and that makes people remember you. Those of you with short-term rentals, you want to do little giveaways. And so like a letter opener. So once they leave your short-term rental, they'll be able to remember you. I strongly suggest you do that, because if they booked you on Airbnb, many times you may not get their direct email. Also do a postcard so that they can take away. Like I suggest to my clients, do postcards of your facility. Like if they have a lake and they have all the landmarks in your area, use it as a postcard on Vistaprint. And then at the bottom, you have your website, and that's what they can use to send letters to their families that I'm on this resort and they look at how fun it is. At the same time, you can buy a little postage stamps too. It's little things like that that make people remember your space, right? Plus, they are writing to their family. So guess what? Their family is going to find out where they are. Guess where they're going to book? You also want to have your own website where people will book you instead of all Airbnb. Case in point, when the COVID hit, Amazon, those who were selling solely on Amazon were hurting because Amazon stopped all their Google ads. So guess what? The people who had their own website were able to sell. Same thing could happen to Airbnb. If Airbnb disappear tomorrow, how are you going to market your own property? So always have your own avenues, way of making money. And this is how you're going to do it. There's OwnerRez, there's all those websites, Verbal, all those places. But you always want to have your own avenue. Pay somebody to build a quick website for you. I know Squarespace, a lady who's using Squarespace, she builds a beautiful website. You can use Wix. You can use so many platforms. It just plug and play. And you just have to link your Stripe. If any of you need help as my client, I've played enough that I can give you some suggestions. You can just build your own site and then have that site at the bottom of your postcard, right? And also when you give them the giveaway, like a mug, and then with the mug with your business name, put the website on the mug, all kinds of stuff that you can do. All those things are tax deductible. So why not use it to grow your business? Always do that. All right. So I think I got a question. Let me see. Okay. No. All right. So let's see. Security. Now, here's the question for some of you asking me about the security system, cameras, and dogs. Okay. So here's the scoop. All the security cameras you have in your home, the cameras outside, and like me, I have 3 cameras, like one here, and one on the door. Now, what you do, if you work from home, you can again take a percentage of that as an expense. Now, I said for the dog, it's going to be very hard pressed to convince the IRS, even though they will fight any intruder. It's a personal pet. So unfortunately, you won't be able to write that off. All right. So I'm sorry to say that. Okay. Now, the next thing is small tools and equipment. Again, if you buy little small tools that is not significant to capitalize as an asset, you can write it off. So for example, some people will buy staples or like some small equipment. It's not worth under 200. It's not worth capitalizing and depreciating. So we just write it off. So small tools will go there. And of course, regular supplies, and then telephone. So the telephone gets tricky. Some of you still do have landlines at home. If you are using it for fax only and you are not using e-fax, you can definitely write it off if it's using for business, right? Yes, they don't. You don't see meals and travel. Yes, travel is, yes, 100%. As long as it's business, it's 100%. However, entertainment is 0. They've nixed entertainment. Meals, some of the meals are 100%, especially if it's with clients, not with family. I know some people will do the argument that they are discussing business with their family, so they take their family out. Be careful with that, because with the meals, when they come, they want to know who was there, what was discussed, what was the agenda, all kinds of stuff. So I tell people, if you're just taking your family out, don't even bother. Use your personal card to do that. But if you have, say, investors, and you have your accountants or lawyers, or you're going for coffee with clients, definitely you can do. This list is just a sample. And so I made my own additional list on here. So the telephone, like I was saying, if you have a landline, you can write it off. If you have a cell phone, now I have 2 cell phones, right? One is personal, one is business. I can easily write this off. And then this one I don't, because it's personal. You can justify it. Even though sometimes some personal phone calls will come on the business one, it's okay because I have my personal one that I can justify that that's my personal phone. If you have just one phone, I'm not saying get 2 phones, but if you have just one phone, I will take a percentage of what I use for business and a percentage for what I use for personal. Always make sure that you split the expenses, because if you don't, then you cannot tell them you have one phone and you don't use for personal at all. That's not, because the thing with taxes, tax deductions, it has to be reasonable in the circumstance, right? So you have to be reasonable with yourself and with the IRS. Now, what are the chances of getting audited? The chances of getting audited is not as big as people make it out to be, especially if you keep your books clean and you deduct things that you are entitled to. You don't push the envelope. Yes, you can push the envelope a little bit, but be careful. Be careful taking advice from people. Like today, I saw this thing that made me do a post about celebrities flashing some blueprints. They said, this is what your CPA will not tell you. Yes, we won't go that route because we know the problem that is going to bring to you. And these people, where would they be 2-3 years down the road when you are in trouble? They are not there. We will be there to take the case to tax court. I don't want to go to tax court for anybody if I don't have to. And so I just want to make sure that everything that you take, every deduction that you take, make sure it's justifiable, that you can fight it. I only deduct things that I feel I can justify. Yes, I do push the envelope sometimes, because when I know the government is really, really being crazy, I do push it. But anything that I feel that is going to raise a red flag and bring trouble to you, you don't need a government in your business, right? And so, yes, you can do travel, especially those of you in real estate. Say you go see properties and you want to, say, visit England, for example, and you want to look at properties. Make sure that before you go, you have a realtor there. The communication has to be all documented. Then you go visit the property. But be careful. If you're there, you go see, say, 7 days, and you saw the property for 1 day, make sure that 1/7 of it is what you're going to write off, not the whole thing. If the whole thing is exploring London and going around, be strategic about your deductions. Just be careful. So I hope that answers your question for that one. You can definitely have more deductions that don't show here. This is just a sample. So here's a few of them that does not show on here. So you have social media managers that you are using to help you. You have freelancer writers that you are using to help you. I use people on Upwork. I use people on Fiverr, the VAs. You use call centers. You have your cell phones. We talked about that. And of course, I talked about the utility for the house that you can use. And what other thing? You have coaches and classes. You have books for reference. Okay, so I have a question. When documenting mileage, is there anything else that should be done to document mileage other than QuickBooks? Yes, so you can actually use Mile IQ. I think it's $4 a month. And I prefer that to the QuickBooks mileage. And so once you download the app, whenever you are starting your car, you go in the mileage and you tell it which address you're going to and from. I'm told, somebody told me, I think that it picks up your location or something. I don't know. I don't personally use it, but Mile IQ, MILEIQ, that can also help you. There are a lot of other ones out there, but I prefer that. The IRS also has one. However, the IRS one, it sends the information to them. Somebody told me some horror stories, so I will not recommend the one for IRS. But Mile IQ, I think is Microsoft, something like that. And so I would rather use that. So let me know if that answers your question. Okay, so here's other expenses. So for employees, remember, if you have employees, they are part of your expenses. They go on a different line. If you have S Corp, it's on the first page as wages. We deduct that as well. Let me see. It makes sense. Okay, thank you. All right. And so those of you using call centers, because sometimes you don't have time to do the answering your own phone, you can do the call centers. The big thing that I see a lot of self-employed people don't take is the retirement and the health insurance. All of you can have a retirement account, okay? There is something called SEP IRA, self-employment plan. There's also the simple if you have employees. If you have by yourself, you can do owner K. It's similar to 401k, but this one you will need to work with a financial advisor, because last year, it was like 62,000. This year it's kind of up. I think it's 63 or 64,000 that you can put away as a self-employed individual. So those of you with Schedule C incomes, you can put away 20% of your profit if it's profitable, if positive. You can put away. Now, the SEP should have been set up before December. So if you missed it last year, please make sure this year you set up your SEP IRA before the end of the year. Then you have until April 15 the following year to fund it. So when I do quarterly estimate for clients, I take that 20% into account, but we don't fund it until the year is finished, so that we are sure that you're actually positive. Because if we fund it and we find out that you lost money in December, November, and you become negative, we are in big trouble. So the SEP IRA, the banks can open it for you, Fidelity, TD Ameritrade, everywhere. You don't need a financial advisor for that one. However, if you're going to do the owner K and you have employees, then I would say have a financial advisor to make sure that you follow the rules. Because if you have employees and you're doing the SEP, you have to do one for them too. You cannot do just for yourself. All right? So that is the my solution. Now, if you have a Schedule C and you are in a negative, you can still buy a traditional IRA, okay, and write it off against your regular W-2 income. So that's a backdoor way of getting a deduction in a year where your Schedule C is negative. So that is a longer conversation, but I just wanted to tap on it. You have the traditional IRA, you have the 401k that you want to do for yourself, you have the simple, you have the SEP IRA. Now, the next thing is, please let me know if this is landing, the health insurance. A lot of us, we are self-employed and we have a job thinking that the job is the only thing that can give us health insurance. So we are holding on to the job and it's stopping us from growing our portfolio here. You can buy yourself a health insurance in the business for you and your family. All right. So don't let any W-2 people convince you that that's where you need to be to get health insurance. You can definitely buy it through your business. You can buy for your employees. You can buy for your family. Yes, it may be a little bit expensive. However, it's worth the freedom of not worrying about your health insurance. So those are the two big ones that I see people not taking. So please let me know if that is making sense. Okay, so with that said, I'm just wondering, I try not to make the video more than 40 minutes because when it gets to 40 minutes, I find people don't watch the replay that long. But if you still guys have questions, I'll stick around. But if you don't, I'll make it a wrap at 45 minutes. Let's see. If you have any more questions, let me know. So I hope you've been able to see where you can have more deductions. And again, those of you with the real estate, keep track of your mileage. This is an overview. Keep track of your vehicle expenses, your coaching classes. Please don't spend more than you have. I'm trying to tell you all, you don't need anybody else to tell you how to do real estate investing for $10,000, $15,000, $20,000. $1,000, I get it, but anything above that is not necessary. I see a lot of money going down the drain when you could have used that money to pay somebody to do property searches for you on Fiverr so you can gain more property for your portfolio. Please use your money wisely. Last week, we did the budgeting. I posted the budgeting in the group. You can watch the whole budgeting. I had a whole spiel about how you can manage your money. Please do not attend any classes that is not within your budget. I want you all to set up a budget, live with the budget, live within your budget or below, always. This way, you'll be able to grow your business as strong as you can, reduce the amount of debt that you are using for your business. Try to only leverage debt when it's going to buy something that's going to produce more income for you, or you're paying somebody to generate more. And be careful with those Google ads and Facebook ads. All those are black holes for your money to go down the drain. So be very strategic about your money. I had one of my clients, she did an Etsy promotion for $1. Okay, so we said, okay, let's play with it. The promotion for $1 brought her sales of $300. I said, that's what I'm talking about. We got to stretch the dollar from Chicago to Washington, D.C. That's how you have to do. You have to stretch your money as far as you can. So with that said, I thank you so much for hanging out with me. I appreciate you. If there's something you remember later on, I'm only a phone call away or text away or post away. You can always post anonymously within the group, and I'll be happy to answer your questions as well. Those of you who are members and not a retainer client, you cannot call me, but my retainer client, yes, you can. So with that said, I thank you so much from the bottom of my heart. Have a blessed evening. God bless you. Oh, I'm sorry, you are late. You are late. I just wrapped up. I'm sorry. I'll have the recording to you as soon as tomorrow morning. I just wrapped up. And so definitely I will send the recording to you in the morning. All right. Thank you, sis. Thank you.
All right.
Okay.